Hello, Dr. Phil here. All right, so this video is going to deal with process costing or process operations. So let's go ahead and jump right into it. So process operations, we think of process costing and operations as mass production. So a very similar, identical homogeneous units, continuous flow of sequential processes, and a standardized process to make large volumes of similar products. So if you look at some of these examples here, you can probably look at these and say, yeah, I see that, they would mass produce cereal, pharmaceuticals, right, soft drinks, so on and so forth. So the organization of process operations. So each process is a separate production department. So think of like Department A just does one thing, that's all they do, and then maybe the units get done in Department A, go over to Department B, and then Department B just does something else as well. So the variance is by departments, right? Each process applies direct labor, overhead, and direct materials to move the product to completion. So again, just working its way through these series of departments. The final process in series finishes goods and makes them ready for sale. So there's kind of a little example down here we can look at, like peanuts, right? Dried fruits, chocolate. So we bring in the materials. The first thing they all do is go through the roasting department. And then again, what is the roasting department doing? One thing, right? Just roasting. Then they get done in the roasting department. Then they go to the blending department. And again, what is the blending department doing? Just one thing, right? And then they're done. They go over to finished goods inventory, and then they are ready to be sold. So in terms of comparing process and job order costing systems, so we think of job order as, low volume of production, custom made, and that's kind of what you see at the top here. And then this is what we're going to focus on in this chapter, the process costing system, right? So direct materials, labor, and overhead, just like above. But again, the delineation now is done by departments. So you can see here the roasting department, right? And then they have a certain cost per unit. And then the units are going to go to the blending department. They're going to add their cost per unit. And then they're going to have a total cost per unit as it sits in finished goods. So the following four steps demonstrate process costing using what we call the weighted average method. And at the end of this video, we'll look very quickly at the FIFO, first in, first out method too, just in case you ever run across that. So number one, determine the physical flow of units. Number two, compute the equivalent units of production. Sometimes we call that EUP. Number three, compute the cost per equivalent unit of production. And then number four, assign and reconcile costs. So number two being probably the most challenging of all four of these. All right, so step one, determine the physical flow of units. So we can see here, we're looking at, the first thing I would say is look at what it says total units to account for, and it says equals total units to account for. The idea here is that whatever units you had in the beginning, in this case 30,000, and then whatever units you started this period, which they're in the period of April, must equal the amount that you transfer out and then the amount that you have left over. So we can see like 120,000 between beginning inventory and units that were started during the period has to equal what was completed and transferred out during the period, 100,000 in this case, and then what is left over, of course, 20,000. So if we look at it down here, it's kind of the same thing, just a different way. Units to account for, beginning work in process, 30,000 units. That would have, of course, what they brought in from March into the first day of April. Units started during this period, which was April, 90,000. So there is your 120,000, which is, of course, these two. And then if you look on the right-hand side, units accounted for, units they completed and transferred out was 100. And then units that are left in work in process, 20,000. So of course, this 20,000 units, they're not finished yet. They're going to have to be finished in the following period. All right, step two, compute the equivalent units of production. So what we're looking at here is we're looking at percentages. Okay, so we can see that as far as the materials go, they already added all the materials. So like all the materials for the whole process have been added. So we don't have, for that department anyway, have been added. So we don't have to worry about any equivalent unit calculation here. But if we notice for conversion and beginning work in process inventory, they'd only done 65% of the conversion. So they've got 35% left to do during the period of April. Units completed and transferred out. Anytime it says units completed, you can always take it to the bank that the completion, the percentage completion for materials and conversion will always be 100%. Makes sense, right? Because if they're done, they're done. They're 100% complete. And then ending work in process inventory. Again, the direct materials were already added at the beginning, so the ones that are sitting in the ending inventory here, they've got all the materials. You can see that, right? 100%. But they still have, I should say they've only got 25% of the conversion done, like the labor and the overhead added. They still have 75% more left to do, which of course they will add in the next period, right? On May 1, or I should say the period of May. So continuing step 2, compute equivalent units of production. So the equivalent units of production, or EUP, equals the equivalent units completed and transferred out, plus the equivalent units and ending work in process. Okay, so you can see down here for the roasting departments, and we're just looking at the roasting departments. So we can see direct materials, we can see percent complete, and then equivalent units here. So you're really just kind of working away from left to right. So remember I said if it says completed and transferred out, then they are, as far as the completion goes, they're always 100%. So 100,000 units times 100%, you also have 100,000 equivalent units. Well, ending work in process, they've got 20,000 units that are also done. It's 100% complete. So, so here for materials, we're good, right? 120,000 is the equivalent units is equal to the actual units. Now for conversion, we notice that we have 100% that were completed. So again, anytime it says completed, it's done, 100%. But there were only 25% complete for conversion. So what we do here is we say, okay, well, we know we had in ending work in process, in ending inventory, we had 20,000 units, but they're only 25% complete. So we take 20,000 times 0.25 or a quarter, and that's where they're getting the 5,000 units. The idea of equivalent units of production is that based on the amount of resources that they've put in, yeah, they've only completed 20,000 units. They've got like 20,000 physical units sitting there. Each one of those units is 25% complete. But based on the amount of resources they've used, this equivalent units, they could have made 5,000 units in their entirety, right? Because that would be the same resource consumption, right? Make 20,000 units, a quarter of the way each, or you can take that same amount of resources and you can make 5,000 units completely. All right, step 3, compute the cost per equivalent unit. So we've got some costs here that were given to us. You didn't have to calculate these. Direct materials, 81 grand. Conversion, 1089. If you add those together, 189.9. And then we've got the costs that they added during this period. So they added 279,000 of materials, 376.2 of conversion costs for a total of 6552. And then if we add the 189.9, 6552, we get this 845.1. So their total production costs during the period of April was the 845,100. So now we know that, then we can start to plug in some of these numbers down here, right? So you can see cost of beginning work in process, 81,000 from up here. Cost that they added during the period, 279 from here. And then again, costs, as far as conversion, you can see the 1089 and the 376.2. 1089 and 376.2 from above. So we have our total cost broken out, just slightly different way now, right? From here, they broke it out by beginning work in process and then cost they added during the period. Here, we're just breaking it out by beginning work in process and then the costs that were added based on materials and conversion. So divided by the equivalent units of production. So we're dividing. So here, notice, and I put here from step 2. 120,000 equivalent units of production for materials. If we go back, you can see here 120,000 equivalent units of production for materials. And then while we're here, just refresh your memory, 105,000 equivalent units for conversion. So you can see the 100 where I plugged in the 120 for materials, the 105,000 for conversion. So we have a cost per equivalent unit of $3 per equivalent unit for materials. And then we have 462 for conversion. And sometimes students will ask me, like, why do you have to do all that? Like, why do you have to go to all this extra trouble of determining percentages and the like? Well, there's different reasons, but one of the reasons is if you didn't do that, then you would end up skewing the costs in the sense that you need to know, based on all the resources that you put into something during a period, you need to know how many units you could have produced in order to do this. If you don't do that and you instead just use the actual number of units, bearing in mind they're not complete, then if you think about it, it would serve to skew your cost data and your subsequent per unit data. All right, step 4, assign and reconcile costs. So, and I've put in here like from step 2, from step 3. So if you want to go back, you can certainly do that. So remember EUP, equivalent units of production. So you remember the 100,000 for materials. There were 100,000 for conversion based on, remember if it says completed and transferred out, then it's done. So we had the 3 and the 462 from here. That's where I'm plugging in, and I plugged it in down here to 2, 3, 462. And then ending work in process, direct materials, they had 20,000, but remember the materials were done. And then they had conversion of 5,000. This is your equivalent units. So they have total cost accounted for. What we're basically doing here is we're just checking to make sure that the 845.1 that you see here in the red, we're just making sure that we've accounted for all those costs that we have. We've transferred out 762,000 of that cost. We've got 83,100 still sitting in ending work in process. So here you just see this is basically everything that we just did added together. So what I would recommend you do is maybe this might be a good time to kind of pause the video. This is all the steps we just worked through, and just kind of work your way through step by step. Just make sure that you are comfortable with each step. All right, so let's talk a little bit more about some of the accounting going on. We talked a little bit more about the numbers here, but not so much the accounting. Let's talk a little bit more about the accounting. So you can see number 1, raw materials inventory. So we have basically materials being transferred from raw materials inventory. This is direct materials being transferred over to work in process, right? The assembly line, or in this case, the department. And then you've also got work in process inventory, the roasting. So think about the roasting and the blending. These are the 2 different departments. So materials is being transferred from the storeroom, from raw materials inventory to both departments. We've also got indirect materials, right? Number 3, going straight to factory overhead as it should. And then we've got the applied overhead, which is going into, again, back into these 2 departments. Remember, they're just applying it kind of evenly throughout the year. They'll take care of any differences, numerical differences at the end of the year. And then we also have down here, we have payroll. So the indirect labor is being recorded straight to factory overhead. The direct labor, of course, you can see by these 2 arrows, is being recorded directly to the departments, right? To work in process for each department, roasting and blending. Once they're done, the packaged, in this case it's called fit mix, is transferred to finished goods inventory. Think about the warehouse. And then finally it's sold. So then once they've sold it, they transfer that cost to cost of goods sold, because now they have revenue to match it against. Okay, so just a little, this is just some of where these numbers are, that they're attaching to different departments. So you can see, for example, raw materials inventory, last day of March, 100 grand. Beginning work in process inventories, March 31st. Basically, what they mean by that is like the first day of April. And then they've got the 2 beginning inventories here for the departments, roasting and blending. They've got materials that they purchased on credit, 400,000. Excuse me. They've got material requisitions during April, and so on and so forth. Over here, they've got the factory payroll for April. They've got other overhead costs that they added during the period. Yeah. And then the next thing we're going to talk about is accounting for the material costs. So this is just the kind of the journal entries that would record some of these transactions. So like, and you can see down here in the italics, it kind of says what it's for. Purchase materials on credit for factory use. So they're debited or increased, raw materials inventory, and they credited accounts payable. For number 2, they're recording the direct materials they used. So they're debiting the 2 with work in process inventory accounts for the 2 departments, roasting and blending, and they're crediting raw materials inventory. For number 3, you can see they're debiting or increasing factory overhead. 71,250, and they are crediting, or excuse me, decreasing raw materials inventory. Number 4, they're just recording the direct labor that was used. So you can see they're charging it to the two departments and debiting to the two departments, and they are crediting it to wages payable, factory wages payable. Number 5, you can see they're debiting factory overhead, 78,350, and they are crediting factory wages payable. So this time they just took care of the direct labor in number 4. Number 4, now they're taking care of the indirect labor. Okay, number 6, they're recording. These are basically the actual amounts for the overhead that they. This is not what they applied. This is what they actually incurred. So they're adding all these up. These four things, these four amounts here, totals up or sums up to 275,392. So they're debiting factory overhead for the actual overhead bills. And you can see down here they've got the production departments. And you can see that they're using a predetermined overhead rate of 120%. And they're using the allocation base for labor, for overhead, like what is driving the overhead is direct labor cost. And they're charging 120%. So like 171 grand for roasting times 120% or 1.2 will give you that 2052. And then for the blending departments, you've got the 183, 160 of direct labor cost times again 120% or 1.2 is going to give you this 219,792. So they charged a total of 424,992 as far as applying the overhead. And then here you can see where they recorded their application of overhead to the two departments, roasting and blending, right? 2052 went to roasting, 219,792 went to blending. And then the credit, of course, was the factory overhead for the total of those two, 424,992. And then number 8. So this is where they are basically transferring from one department to the other. So you can see it says we're debiting or increasing work in process inventory, blending, and they are crediting or decreasing work in process inventory roasting. So they're basically just transferring units from the roasting department over to the blending department. That's all that's going on there. You can kind of see it down here. They're transferring out 100,000 units up here, and then you can see the cost that's being transferred out down here. So don't think of these as different. These are the same. The top two are just showing you the number of units. The bottom two are just showing you the dollar amounts that are associated with that. Number 9, they're just recording where they've transferred it to completed goods. Think about the warehouse. They're increasing the inventory account, finished goods inventory, and they are decreasing the inventory account, work in process inventory for blending. So it's done. Blending was obviously the last department. It's now being transferred over to the warehouse. And then here you can see they have their cost of goods sold. They took their beginning finished goods inventory. And again, these numbers were given to you. They added their cost of goods manufactured for that period. They added the two up. And then they subtracted the ending finished goods inventory, which gives us their cost of goods sold. Okay, so let's see. I think we just covered that part. So number 10. Here they're recording the sales, and these are obviously credit sales because you can see the debit to accounts receivable. If these were cash sales, the debit would be to cash. So they're debiting or increasing the asset account, accounts receivable, and they're crediting or increasing the stockholders' equity account sales. So they sold just under $2 million worth of stuff in April. And then, of course, matching with the revenue, they're matching the expense, cost of goods sold. So 1.341 million. So they've got a pretty good, decent margin here between these two. That, of course, would be the gross margin, right? The difference between sales and cost of goods sold. And they, of course, are down here, number 10, they're debiting cost of goods sold, and they are crediting finished goods inventory. So it's been removed from finished goods inventory, from the warehouse, if you will. It's been transferred over to cost of goods sold. As far as financial statement reporting, so you can see here that for the income statement, you can see sales and you can see the cost. this is really what they're trying to show you. The sales and the cost of goods sold, of course, are showing up on the income statement. And then the three inventory accounts, right? Raw materials, work in process, and finished goods are showing up on the balance sheet. So the cost per completed unit, all we're doing here is we're taking the cost of goods manufactured for the period, which is 1.262. You can go back, that was in one of the prior slides. And then they're dividing it by the number of units that were transferred to finished goods. So that was 97,000. So they have a cost per completed unit of 13.02. All right, the last thing we'll talk about, just in case you ever run into it, is it's basically the same thing. It's just using first in first out. The one we just did was weighted average. This one is the first in first out method. So it's not too dissimilar to what we just did. There's just a couple of different nuances, if you will. So the following 4 steps demonstrate process costing using FIFO method. So again, FIFO, first in, first out. So number 1, determine the physical flow of units. Number 2, compute equivalent units of production. Number 3, compute the cost for equivalent unit of production. And number 4, assign and reconcile the costs. So step 1, determine the physical flow of units. So the beginning working process, so these numbers are all the unit numbers are all the same as before. So beginning inventory, 30,000 units. They started at 90,000 during the period. They completed and transferred out 100,000 units, and they have 20,000 still sitting in ending inventory. So units to account for, beginning work in process inventory plus units started was the 30 and the 90 that you see up here. So there's your 120. And then units started and completed is going to be equal to what they completed and transferred out, which is the 100,000 down here, also up here. And then the 30, and then minus the 30,000, and that's going to give us 70,000 units. Okay, so this is kind of another way to kind of demonstrate this. So beginning work in process inventory as of the last day of March. So again, think about the last day of March, March 31st, as the first, the beginning day of April, 30,000. Units started and completed was 70, and then ending work in process is 20. So between those three, the beginning, what they started and completed, and what's ending, they're accounting for their 120,000 units. And you can see the same thing at the bottom down here. All right, step 2, compute equivalent units of production based on the FIFO, first in, first out method. So you can see here, direct materials were 100% complete, so that one's easy. Conversion was 65% complete at beginning inventory. Obviously, anything that's started and completed is 100%. And then ending work in process inventory is 25%. Okay, so equivalent units of production equals the number of equivalent units needed to complete the beginning work in process, plus the number of whole units started, completed, and transferred out, plus the number of equivalent units in ending work in process. So these are your numbers right here. So 30,000 units, we didn't need to add any materials, right, because they were already 100% done. They did need to add 35% conversion. So if you're like, okay, where's he getting that 35% from? So you can see here, the beginning inventory was 65% complete already. So think of that as they needed to do another 35% to get them done. So there's your 35% there. Started and completed would obviously be 100% for both. That's your 70,000 units. And then for the 20,000 units that were ending, we know that the materials were all added at the very beginning, so that's 100%. And then the percent they needed to add for conversion, we go back. You can see here they've got 25% done, but this 25% will just stay at 25%. The remaining 75% will be done in the following period. So then you just add them up, and we get our 90,000 equivalent units for materials, and then we get 85,500 for conversion. All right, step 3, compute the cost per equivalent unit. So again, they're giving you, I think these are the same numbers they gave us before. Yep, 845.1, I remember that number. So now it's just a case of plugging in like the EUP equivalent units you got here, 90,000 for materials, 85.5 for conversion. You can see here, 90,000 for materials, 85.5 for conversion. So we get 310 per equivalent unit, and then we get 440 per equivalent unit. So again, this is a slightly different method. It's not, as you see, based on the equivalent unit numbers. They don't come out too much differently, excuse me, but they are a little different. So it is worth having at least seen this method, having some exposure to it in case you ever have to do it one day. And then finally, step 4, just assign and reconcile the costs based on FIFO. So this is everything that we just did. You can see you got the beginning work in process, this is where they completed the work in process. Started and completed, this is what they started and completed during the period. And then we have our ending work in process down here. So think of this as somewhere where you might just want to pause for a second, just work your way through the numbers. Like, okay, for example, why is direct material showing a 0? Here's a hint, because they already added all the materials, so they didn't need to add any more. But this is a good, well, and we're at the end of the video anyway, but this is a good place to stop and kind of work your way through and say, okay, why is that? Why is that? And if you need to, just go back to one of the previous slides in the video. All right, thanks for watching, and I'll see you all soon.